Ever wonder how people actually make money in real estate? It's not just about flipping houses like you see on TV. It's a lot more interesting than that. Today, we're going to break down the 4 main ways real estate builds wealth. And by the end of this video, you'll see the entire big picture. So, grab a coffee and let's dive into the real secrets of real estate investing. First up, the one everyone knows, or at least thinks they know, cash flow. This is the simplest concept to grasp. Cash flow is the money you have left over from your rental income after you paid all the bills. So, imagine you own a rental property and you collect $2,000 a month in rent. Now, you have expenses. There's the mortgage payment, let's say that's $1,000. Then there's property tax, maybe $200 a month, and insurance, let's call it $100. You also have to set aside money for repairs and maintenance because things will break. Let's say you budget $200 a month for that. And if you have a property manager, they'll take a cut. Maybe another $200. So, you add up all those expenses. $1,000 for the mortgage, $200 for taxes, $100 for insurance, $200 for repairs, and $200 for property management. That's a total of $1,700 in expenses. You subtract that from your $2,000 in rent, and you're left with $300. That's your positive cash flow for the month. It's money in your pocket every single month, just for owning the property. It might not sound like a life-changing amount, but imagine having 10 properties all doing that. That's $3,000 a month of passive income. That's the power of cash flow. It's the engine that keeps your investment running and paying you while you wait for the other wealth generators to kick in. Next, let's talk about appreciation. This is where things get really exciting. Appreciation is simply the increase in your property's value over time. Real estate, historically, has been a fantastic long-term investment. While markets can go up and down in the short term, over decades, property values tend to rise. Think about a house that was bought for $50,000 in the 1980s. What do you think it's worth today? Probably hundreds of thousands, maybe even over $1 million, depending on the location. That's appreciation in action, and it's not just a guessing game. Several factors drive this growth. Population growth means more people need a place to live, which increases demand for housing. Inflation also plays a huge role. As the value of money decreases, the price of hard assets like real estate tends to go up. And then there's development in the area. New schools, shopping centers, or major companies moving in can dramatically boost property values. So while your cash flow pays the bills, appreciation is quietly building your net worth in the background. It's like planting a tree. You don't see it grow day by day, but over 10, 20, or 30 years, you'll be amazed at how big it gets. This is the long game of real estate investing. Now for my personal favorite, and what I call the supercharger of real estate returns. Leverage. This is a concept that truly separates real estate from many other investments like stocks. Leverage means using other people's money, usually the banks, to buy an asset. Let's say you want to buy a $500,000 property. You don't need to have all $500,000 in cash. You might only need to put down 20%, which is $100,000. The bank lends you the other $400,000. Now, here's the magic. You'll put down $100,000. But you get to benefit from the full appreciation of the entire $500,000 asset. Let's say the property value goes up by 5% in 1 year. That's a $20,000 increase in value. But you only invested $100,000 of your own money. So, your return on your cash investment isn't 5%, it's 25%. That's a $20,000 gain on your $100,000 investment. That's the power of leverage. It magnifies your returns. And there's another amazing part to this. While you're enjoying that appreciation, who is paying back the bank loan? Your tenants. Their rent payments cover your mortgage, so they are essentially buying the asset for you over time. This is called amortization. Every month, a portion of that mortgage payment reduces the loan balance, increasing your equity, which is the part of the property you truly own. It's a beautiful cycle. Finally, we have the fourth wealth generator, which is often overlooked but incredibly powerful. Tax benefits. The government loves real estate investors, and they offer some amazing incentives. One of the biggest is depreciation. Even if your property is going up in value, for tax purposes, the government lets you depreciate the value of the building over 27.5 years. This isn't real money out of your pocket, it's a phantom expense on paper. This depreciation deduction can be used to offset your rental income. Remember that $300 a month in cash flow. Because of depreciation, you might legally show a loss on your tax return. Meaning, you could pay zero income tax on that cash flow. It's a huge advantage. Another major tax benefit is the ability to defer capital gains. Tax through something called a 1031 exchange. This means when you sell a profitable investment property, you can roll those profits into another, similar property without immediately paying taxes on the gain. This allows your investment to grow tax-deferred, compounding much faster over time. And let's not forget, you can also deduct many of your expenses, like mortgage interest, property taxes, insurance, repairs, and property management fees. All of these deductions lower your taxable income, saving you a lot of money come tax time. So let's put it all together. You buy a property using leverage, putting down just a fraction of the cost. Your tenant's rent creates cash flow that pays your mortgage and expenses. As they pay the mortgage, they are building your equity for you. Meanwhile, the property is appreciating in value over the long term, building your net worth. And on top of all that, you get incredible tax benefits like depreciation that let you keep more of your money. It's this powerful combination of cash flow, appreciation, leverage, and tax advantages that makes real estate such a unique and effective way to build serious wealth. It's not a get-rich-quick scheme. It's a get-rich-for-sure plan if you're patient and strategic. It's about understanding the big picture and letting these four forces work together for you over time. Thanks for watching today. I hope this gave you a clearer understanding of how real estate investing truly works. It's a powerful tool for financial freedom. If you found this helpful, please hit that like button and consider subscribing for more deep dives into building wealth. Let me know in the comments which of these four wealth generators surprised you the most. See you in the next video.